President Trump, on April 3, 2025, enacted a sweeping 25% tariff on imported cars and car parts. These tariffs, a cornerstone of his America First agenda, represent a significant escalation in his trade war, targeting a global industry deeply intertwined with the American economy. While the Trump administration argues these measures will revitalize domestic manufacturing and protect American jobs, critics warn of a cascade of unintended consequences, including higher prices for consumers, strained international relations, and potential job losses in interconnected industries. The tariffs, effective immediately for completed vehicles, will be imposed in stages with levies on imported parts slated to take effect in May 2025. This staggered implementation has created uncertainty for automakers who rely on intricate global supply chains for sourcing components. The administration argues that these tariffs are essential to leveling the playing field, claiming that foreign manufacturers, particularly those in Mexico and Canada, benefit from unfair trade practices. Trump has repeatedly asserted that these tariffs will usher in a new era of prosperity for the American auto industry, leading to a resurgence in domestic production and the creation of thousands of well-paying manufacturing jobs. However, this optimistic outlook is tempered by concerns from economists and industry experts who foresee a more complex and potentially damaging fallout. The global automotive industry, a highly integrated network of manufacturing, research and trade, is bracing for significant disruption in the wake of these tariffs. The United States, while a major car producer, is also a significant importer of vehicles and parts, relying heavily on global supply chains for both finished cars and the components that go into them. In 2024 alone, the U.S. imported approximately 8 million vehicles, with a total value exceeding $240 billion. Mexico, a close trading partner and a hub for automotive manufacturing, stands to be particularly affected by these tariffs. With numerous U.S. automakers operating plants south of the border, the tariffs threaten to disrupt established supply chains and increase costs for manufacturers. The European Union, another crucial player in the global auto market, is also likely to feel the pressure, as are key Asian producers such as Japan and South Korea. These tariffs represent a significant departure from decades of trade liberalization and have the potential to reshape the global automotive landscape. The interconnected nature of the industry means that disruptions in one region will inevitably ripple across borders, impacting manufacturers, suppliers, and consumers worldwide. The announcement of the tariffs sent shockwaves through the global economy, triggering immediate reactions in the stock market and raising concerns about a potential trade war. Shares of major automakers, both domestic and foreign, tumbled in the aftermath of the announcement, reflecting investor anxieties about the tariffs' impact on profitability and global sales. General Motors, heavily reliant on imports from Mexico, saw its shares fall by 3%, while Fiat Chrysler, with its significant manufacturing presence in Mexico, experienced a sharper decline of 3.6%. The ripple effects extended beyond the auto industry, impacting the broader stock market as investors grappled with the uncertainty injected into the global trade environment. The Dow Jones Industrial Average, a key indicator of U.S. market performance, fell by over 200 points following the news, reflecting broader concerns about the tariffs' potential to stifle economic growth and escalate trade tensions with key partners. These immediate market reactions underscore the deep interconnectedness of the global economy and highlight the potential for these tariffs to trigger a domino effect, impacting industries far beyond automotive manufacturing. The uncertainty surrounding the tariffs' implementation, coupled with the threat of retaliatory measures from trading partners, has cast a pall over the global economic outlook. The announcement of the tariffs has been met with a chorus of condemnation from international leaders, economists, and industry experts who warn of dire consequences for the global economy. The tariffs have been labeled protectionist, counterproductive, and a threat to the rules-based trading system. Japan's Prime Minister, a key figure in the global automotive industry, expressed deep disappointment at the tariffs, warning that they could have serious repercussions for the global economy. The European Union, a major trading bloc with significant automotive manufacturing capacity, threatened retaliatory tariffs on U.S. goods, escalating fears of a full-blown trade war. The International Monetary Fund, a global organization tasked with promoting financial stability and international trade, cautioned that the tariffs could undermine global economic growth, leading to higher prices for consumers and reduced investment. The organization urged dialogue and cooperation to resolve trade disputes, emphasizing the importance of a rules-based trading system for global prosperity. The tariffs have ignited a fierce debate within the United States, dividing stakeholders along economic, political, and geographic lines. While the Trump administration and some segments of the manufacturing sector tout the potential for job creation and a revitalized domestic auto industry, others, including many economists, consumer groups, and businesses reliant on global supply chains, warn of unintended consequences that could harm American consumers and workers. Proponents of the tariffs argue that they are necessary to protect American jobs and level the playing field with foreign competitors, who they claim benefit from unfair trade practices and currency manipulation. They point to the potential for increased domestic car production and the creation of manufacturing jobs as evidence of the tariffs' positive impact. However, critics argue that the tariffs are a blunt instrument that will ultimately harm American consumers and workers. They contend that the tariffs will lead to higher prices for cars, making them less affordable for American families, and could spark retaliatory tariffs from trading partners, harming U.S. exports and leading to job losses in other sectors.